Hey there, it's Walter here from FX Jake, and you're here at the Daily Trader. Today I have a question that came from Dom's in the personal trading program, and Dom was asking about big shadow setups. And as many of you know, big shadows, let's see if I can find one here. This is an example of a big shadow right here. Boom. This candle right here. As many of you know, those of you that read the Naked Forex book or have spent time watching my webinars and know the way that I trade is one of my favorite trade setups is this one right here. It's a big shadow where the market, in this case it's a sell signal. The market's come up, it's printed a bearish engulfing candle or big shadow where the close is down near the low and the candle has a higher high and a lower low than the previous candle. Also, it's nice that it's sort of printed at an area on the chart here where we've seen recent resistance, and if we go back here, you'll see a little bit of resistance there, some support there, resistance there. I suspect if we go back further, we'll also see that price area come up. Well, okay, I've gone too far. Alright, that's fine. You get the idea. The basic idea is that when the market gets to a level and prints a engulfing candle, it's a special case of an engulfing candle, we wait for the market to trade lower, and then you can see in this case the market came all the way down here to where these recent lows were right there. So that was an easy big shadow setup trade. Now let's go ahead and advance the chart one candle at a time here. I'm just gonna hit the F12 key here and advance the chart once, one candle at a time. Actually, I'll just do it manually. And where are we? Here we go right here. Okay, so this is the level we've seen the market fall here. It almost made it back up here, made sort of a lazy top up here, or a moolah as we like to call it, and then it fell down. Then the market came back up here, printed another bearish candle, came back down to where there was resistance, became support, 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 came back up here, printed a bearish candle. Now let's see what the high is here on this one. It's 95.05. It's actually the same high as this previous candle here. So it doesn't actually qualify as a bearish big shadow. In other words, it's equal highs. The previous candle had a 95.05 high, and this candle has a 95.05 high. However, the market does trade lower than the first candle, so we could take this as a valid bearish big shadow setup, even though it's equal highs, and target this green level down here and then this blue level down here. You can see in this case the market did make it to the first target, but then it rocketed back up. So usually when that happens, I get stopped out at break even on the second trade there. Now we'll talk more about splitting up your exits in another video, but for right now, the basic idea here is that I do like those big shadows if they do have equal highs or equal lows. In this case, because it's a bearish setup, the important thing to me is that the market closed lower than the low of the previous candle. The previous candle here had a low of 94.31, and the bearish big shadow here had a low of 94.06. So that's 25 pips lower. And it closed really close to that low as well, which is very important for a bearish setup. So to me, this is a valid bearish big shadow. Now there are other things about it that could make it even better, but the important thing here to note is that if I am going to trade a candle, a bearish big shadow, where it doesn't quite qualify because we have equal highs, the important thing really is that the close is bearish, and this close is bearish. The low is lower than the previous candle, which is critical for a sell trade. The reverse is true for a buy trade. If I'm taking a buy setup, I want to make sure that if they do have equal lows, that the close is up near the high and that the high is higher than the previous candle. Let's see if I can find an example of that. Well, here we have a true bullish big shadow here right off of these highs, which is sort of a standard one. But this one actually over here, the lows aren't equal, so we won't look at that one either. Let's see if we can find one. Here you go. This is a good example of it right here. So now, first of all, notice that the market held right here. Then we have a low here at 77.09, and then what's the low on this bullish big shadow? Oh, it is actually 2 pips lower. It is 77.07. But let's say that they did have equal lows, 77.09 and 77.09. Well, guess what? This close was so much higher than the high of the previous candle, and the close was right on the high. The high was 77.96 and the close was 77.95, 1 pip away. to me, that is a great sign that the market is going to go higher. And in fact, it did. And where did it stop? It stopped right up here. The market went all the way up here and stopped right up here where the market had, where it fell right here and fell right here. It's a great example of how I can use both recent resistance to target take my profits, but also how I can take a simple bullish setup. And the important thing on this bullish setup is not the fact that these lows are so close together, but really that the close is much higher than the previous high over here. That close is much higher. The high is much higher, and the close is much higher. Remember, this candle right here had a high of 77.75, and a close all the way down here at the low. This candle over here had a high of 77.96, so it's almost it's over 21 pips higher. So that's a big deal, and the fact that it closed 20 pips higher than the high of this candle tells me that that's bullish movement. Also, it's sort of a double bottom formation. The market came here, couldn't break through, moved up, came back down. And remember, over here the market found resistance, a little bit of resistance here, same place where it found support here. So all the stuff lines up here. That's a great example of the same principle but in reverse for a bullish setup. So I hope that this helps. I hope that if you do look for bullish big shadows and you're looking for exceptions to the rule and reasons to take a setup, that if you do find equal lows on a bullish setup or equal highs on a bearish setup, you keep in mind that the close is really the critical part here. In another video, we'll look at other aspects of the bearish big shadow and the bullish big shadow setup. But for right now, I just want to get that across, which is if you have equal lows on a bullish setup or if you have equal highs on a bearish setup, the important thing is the close relative to the high for the bullish setup and the close relative to the low for the bearish setup. That's absolutely critical. I'll see you in the next video, and until then, I wish you very happy trading.